What's up everybody, I'm Jaspreet Singh and the newest headline taking over the financial news is this greatest wealth transfer in history which has now begun. We are entering a new phase in our economy where we are going to see the biggest transfer of wealth in history. So what exactly is this great transfer of wealth that we're about to see? Is it Bitcoin? Benzinga even put out an article titled "The Biggest Transfer of Wealth in Human History, Bitcoin Popularity Among Millennials and Gen X." Well, that's not it. The great wealth transfer that we're entering into right now is the baby boomers who have accumulated the biggest piece of wealth in history, and now as they're entering retirement and as some of them are dying, their wealth is being transferred to the next generation. I want to give a quick shout out to Economics Explained, Graham Stephan and Andre Giek for helping to inspire this video, but according to the Wall Street Journal, baby boomers are people who were born between the years of 1946 and 1964, and now as baby boomers are hitting this late stage of their lives where they're retiring or they're passing away, they're about to transfer the biggest chunk of wealth in history, and it is going to millennials who happen to be 10 times poorer than baby boomers. It's not a surprise that millennials have had to face financial hardships. I mean, millennials have to go through more schooling than they did before, and the schooling that we had to go through is more expensive and takes longer, and now you go through this more expensive schooling through the help of debt, and you go and get a job which isn't paying you as much as previous jobs did, but now you have this income, and you have to pay for more things because we have a higher standard of living and a higher cost of living, and now because of all of that, you have to pay back all your student loans, and so you have to now delay buying a home, you have to delay your marriage, and you have to delay starting your life because of all the things that we have around us. The Wall Street Journal says that baby boomers have accumulated something around $35 trillion worth of wealth. Now the number that they have accumulated really varies from study to study. I've seen studies say that they've accumulated $50 trillion of wealth. Some people have said that they have accumulated $70 trillion worth of wealth. But let's assume that baby boomers have only accumulated $35 trillion worth of wealth. This is still almost 10 times more wealth than millennials have accumulated, and now as baby boomers get older, as they retire, as they begin to pass, this money is then going to be passed along to the next generations. In other words, millennials might be going from the poorest generation in recent history to the richest generation of all time, and there's some implications as to what that means for you and the economy. For one, every millennial isn't suddenly just going to become rich. I mean, you need to have rich parents that have a lot of money and a lot of assets in order for you to inherit a lot of money and a lot of assets. So you're going to see a difference between some people and others. Some people are going to get a lot of money and a big inheritance, and some people are going to get, well, nothing. Second, this great transfer of wealth is going to stimulate a lot of spending because, well, millennials like to spend money. That doesn't mean that the 2-hour line to get into Gucci is now going to become a 4-hour line, but it does mean that you're going to see a lot more spending happen in our economy. Some of this money is going to go to luxury companies like Gucci, and some of it is going to go to just more moral and sustainable type of companies because millennials love spending money on things that align with their morals and their values. And third, this one goes back to one of our core foundational financial theories. There's nothing certain in life except death and taxes. When we see this great transfer of wealth, you already know that the government is going to want to take their cut. So chances are you are going to see a change in the way that the government taxes this money because they've already started discussing a change in the way that estate money is taxed. Let's quantify what this means. According to Google, there are 76.4 million baby boomers in the United States of America. Let's do some basic math. If there is $35 trillion worth of wealth hoarded by baby boomers, and there are 76.4 million baby boomers, that means on average, a baby boomer should have around $450,000 worth of wealth saved in their retirement accounts that they are ready to use to retire. Except CNBC says that the average baby boomer only has $102,000 in their savings and another $138,000 in their retirement accounts. So if baby boomers only have $240,000 in their bank accounts and their investments, where's the difference? Where's the other $210,000? Well, this additional $210,000 isn't things like their home. This is equity that you have in the home that you live in. Or maybe it's art, or watches, or jewelry. These are money or wealth that boomers have accumulated but this is not cash that they can spend. This is not money that they can use for their retirement unless they sell it, but this is not money in their savings or their retirement investment accounts. So even if the baby boomer generation spends all the money that they have in their savings and they spend all the money that they have in their retirement accounts in their golden years, well, that means that the average millennial, now I know this is not everybody, but average millennial is going to get something like $210,000 passed down to them, which is about half of $35 trillion, which means there's going to be a lot of money actually flowing down to the next generation, even if the baby boomers go out and spend all the cash that they have. This means that we have some bad news and we also have some good news. Let's start with the bad news. The bad news is, for one, $240,000 really isn't a lot of money if this is all that you have to live off of. I mean, even if you follow the 4% rule, which says that you will be able to live off of just 4% of your retirement money each year. So you take 4% of your principal, 4% or $240,000 each year, and that's what you spend. Well, if you just live off of that 4% of $240,000, that's less than $10,000 a year. So that's not a lot of money. Now, if you get Social Security, you might be able to get a little bit more money, but still, even if you get Social Security, we're still talking about like $20,000 a year to live off of in your golden years, assuming you have $240,000. And remember, this is just the average. You have a lot of Americans that don't have $250,000 in their retirement accounts that are getting ready to retire. That means you're going to see more strain on millennials and young people trying to financially support their parents, and you're also going to see more financial strain on the system because the government is going to want to try to take care of the baby boomer generation, whether it be through healthcare, whether it be through welfare, and so you're going to see more strain on that, which means we are in a system right now where the government is already bombarded and overloaded with debt, and they're already spending more money that they're bringing in, and now they're probably going to have even more costs. Couple that with the fact that inflation is not slowing down, and we're seeing record high inflation, and the price of things keep going up, which means you need more money, which means a lot of baby boomers, while it looks like they have a lot of money, while they have the biggest wealth amount in the history of time, are still going to be struggling financially when it comes time to retire. The good news is, if you have rich parents, or even if you don't have very rich parents, you have okay parents, chances are you are going to get some sort of inheritance, which should give you some sort of boost when it comes to building your wealth, which should, in theory, help grow the economy. Now, some of you are probably watching this video thinking, Jaspreet, my parents are not going to give me $250,000 inheritance. I don't know how you can say that that is the average inheritance. This $200,000 difference here is not the average inheritance. This is just a number that we were coming up with to show that there's going to be a lot of money that boomers have that they'll be able to pass down. So let's talk about inheritance and how much money you might be getting. The median inheritance in the United States is $69,000. Not bad, but also not a life-changing amount either. I mean, if you got $69,000 today, you'll feel good, you'll feel a little bit richer, but it's not going to change your life forever. I mean, you can use the $69,000 to maybe go out and buy one rental property, maybe help pay down your home, maybe go on a few nice vacations, but it's not going to change your life forever. It's not like you got $69 million, but it is a good, decent chunk of change. But this is where things get interesting. Remember, the $69,000 is the median. That means you take all the inheritance amounts and you put them on a chart, and then you just start slashing the highest and the smallest, the highest and the smallest, and this is the middle inheritance amount. But if you look at the average inheritance, this is where things get really interesting, because the average inheritance in the United States is $700,000. This is skewed by the rich, because rich people who are inheriting millions and millions of dollars are really able to outweigh the people that are getting an inheritance of $10,000. But the interesting part does not end there, because Wall Street is salivating. They cannot wait for this money to pass down from the baby boomers to the millennials, because for one, when people get an inheritance, they're very likely to go out and spend that money, statistically speaking. And on top of that, millennials like spending money, and they're very used to living paycheck to paycheck, and they don't mind the idea of taking the cash they have and going out and financing it to go out and buy even more stuff. Just take a look at this. 70% of inherited wealth is spent or lost in just 5 years. Now, if you've been watching The Minority Mindset and you subscribe to The Minority Mindset and somebody gave you $700,000, chances are you're going to say, oh, I can use this money to go out and invest in stocks, or maybe I can go out and buy some rental properties, or maybe I can buy some cryptocurrency, or maybe I'll go out and I'll invest in a startup, or maybe I'll start my own business. See, you are financially educated. But most Americans don't think that way. Almost half of working America has $0 invested today. And when I say $0 invested today, I don't mean that they don't have a Robinhood account or they don't have a Webull account. I mean that they don't have any sort of stock brokerage account. They don't have any rental properties. They don't have any cryptocurrencies. They don't have any business that they're invested in. They have no 401k. They have no IRA. They have no gold investments. They have nothing. No money invested whatsoever, and they're also not putting any money towards their investments. That's why I always say, if you want to be good with $1 million, you gotta first know how to be good with $1,000, because if you suddenly get a windfall of cash, if you suddenly get $50,000 or $500,000 or $5 million or even $5,000, it's really hard for me to believe that you're suddenly gonna say, oh, I just got some free cash. Let me go out and save this money. Let me go out and pay down some of my credit card debt. Let me go out and invest this money. That way I can become wealthy. I mean, the numbers have shown us that most of the time when people get this sort of inheritance, they're going to go out and spend this money. 70% of families have spent their entire inheritance in just a few years. This is why Wall Street can't wait, because right now we're entering a weird phase in our economy where our economy is slowing down. We're also facing very high inflation, and so companies don't know what's going to come next. So when this money flows from the older generation to the next generation, the millennial generation that likes to spend, they like to flex on Instagram, well, that means more people are going to go out and they're going to spend money at Gucci. More people are going to buy Louis Vuitton. More people are going to spend on Amazon. More people are going to be buying AirPods. More people are going to be going to Lululemon, which means these corporations are going to be making bigger profits, which means good news for their stock prices. Now, I don't know why you caught that, but there were two reasons right there why it is so important for you to get financially educated and financially smart now. That way you can build your wealth, because we are going to see a bigger divide between the rich and the poor. By the way, if you want to start investing in real estate, but you don't want to go out and buy a whole rental property yourself, you can check out our sponsor Fundrise, because now with Fundrise, you can invest in crowdfunded real estate, get exposure to real estate, and you only need $10 to get started. So if you want to learn more and see how you can start investing with Fundrise, I'll put the link to how you can do that in the description below. The first thing you might not have noticed, because it's on the legal side of things, and as an attorney, I can tell you this, is wealthy people understand that there is a chance that their kids are not going to be good with their money. So what they do is they control their money from the grave. Don't blow my money. If you're getting hundreds of thousands or millions of dollars through an inheritance, there's a good chance that your parents who are giving you this money are going to not just give you this money in cash, they're going to put this money into a trust, and this trust is going to determine what happens to that money. The only thing that bugs a wealthy person more than losing money is watching their kids blow their money. And so what wealthy people do is they take this money that they want to give in inheritance and they put it in a trust. And then the trust will determine what happens with the money even after the wealthy person dies. We've all heard the term trust fund babies. So what happens is wealthy people take this cash, they put it into a trust, and then this trust says this money will be invested in stocks, they'll be invested in real estate, or it will say that my child, my son, whoever is receiving this money is not allowed to use it on anything except an investment. And they might even put restrictions on when you can get this money. So what happens is you might want to spend this money on a nice boat and a nice car, but your trust might not let you do that because your father or your mother, your wealthy parents, whoever gave you this money, doesn't want you to go out and blow it. On the other hand, if you're getting $69,000 or even just $69, that money is probably not going to be in a trust because it costs money to create a trust, it takes time to create a trust, and if it's not that much money, it just might not seem worth it. And so when you get this money in cash, you're much more likely to spend it because, well, you can. This starts to create generational wealth because wealthy people are already thinking about the future. They're thinking, what can I do to protect my children? What can I do to protect my children's children? And that way I can make sure that my family name is going to be protected, while broke people don't. The second reason why it's so important to be financially educated now is because as more money gets transferred from the elders to the not so elders, and this money gets spent, it's going to flow to the top. Because when money gets spent, it leaves the people's hands and it goes into the hands of the corporations. So now these corporations make money, and then they're going to try to keep this money. See, corporations don't like losing money. They don't want to spend this money either unless it's going to make the corporation more money. So when you go and spend money at Lululemon, or when you go and spend money at Amazon, these corporations boomers are going to try to keep the money within themselves, and they're just going to try to grow that money. So they're going to spend that money only if it makes them more money. When you spend that money at Lululemon or when you spend that money at Amazon, it's not making you any money. It's just giving you some nice pants that you can wear, or it's buying you some nice markers off of Amazon, but it's making them rich and it's keeping you broke. So as more money flows to the top, more money flows to the corporations, it's going to be more and more important for you to own a piece of the corporations. So the United States of America is a capitalistic society. What that means is you don't just make money off of your labor, you can also make money off of your capital, your money. That's why it's called capitalist. And so wealthy people build their wealth off of their capital, not just their labor. You use your labor to generate some capital, and then you have to use this capital to make you more capital. And so if you want to own a piece of this pie, you want to own a piece of the system, you need to understand how the system works, and you need to own a piece of the system, because if you don't, you're going to end up on the losing side of the equation. Now, this is where a lot of people cry, they complain, they kick, they scream, they hate the system, but the reality is this is what the system is. See, I grew up in that same mindset. It didn't make sense to me. I didn't like how it worked. My parents were working their butt off and they didn't get any time off. But then once you start to understand the system, you start to understand money, that's when you say, well, if this is what the game is, how about I learn the rules, that way I can use the system to my advantage. So what I'm trying to do is show you, hey, this is what's happening. You need to be financially educated, that way you can capitalize on what the system is, because you need to learn the rules of the game. Most people are losing in the game of money because they don't understand how the game of money works. But there's one piece in the middle that I haven't discussed yet, because before the money goes from the boomers to the younger people, there's a step in the middle that you need to understand. So you have this $35 trillion, somewhere between $35 and $70 trillion, depending on which survey you read, and that this $35 trillion is gonna pass down to, I'm just gonna write young people. It doesn't always have to be young people, it can be passed on to really anybody, but let's just assume for simplicity that it's passed on to young people. Well, when the government watches this much money flow from somebody's hands to somebody else's hands, they're gonna want their piece of the pie. So right here, what's gonna happen is the IRS is gonna say, whoa, 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 before you give that money to somebody else, we want our piece of the pie too. Now, if you're one of these people watching this and you're worried about the IRS taking their cut out of your hard-earned wealth, well, the good news is this tax code is in your favor in 2022. The rule is in 2022, if you are gifting less than $12.06 million, you don't gotta worry about it. If you're gonna give your heirs, your next of kin, your next generation, whatever it is, if you're gonna give them $10 million, you don't gotta worry about it because you are under the $12.06 million threshold. And if you are a married couple, you can double that and gift $24 million before you have to even worry about taxes, assuming you die in 2022, and that's when your money passes on. If you're giving away more than $24 million, well, that's when the taxes hit, and the taxes can be pretty steep. Right now, the top tax rate is 40%, which means if you're giving $100 million, well, the first $24 million is going to be untaxed. And then for most of the other $86 billion or so, you're going to be paying 40% in taxes on that money straight to the IRS. If these numbers seem really high, it's because President Donald Trump, back when he was in office, passed the Tax Cuts and Jobs Act, which increased the amount of money you could give in inheritance without having to pay any taxes. Now, President Joe Biden has said that he wants to change this and he wants to significantly lower this, but we haven't seen that happen yet. He has said that he would be considering bringing this down to just $1 million. So if you die and you pass more than $1 million, that's when your money would be subject to estate tax. But again, that hasn't been passed yet, and we don't know what's going to really happen with that yet. It's not that surprising to think that the government wants a bigger piece of this inheritance because, well, the government is drowning in debt. They're struggling to pay their bills. The government is really struggling financially, so they need more money. And one way that they can get more money is by raising taxes. But if they raise taxes on you even more, then the average American family is going to be struggling even more than they are now. And that's difficult when you're in a time with such high inflation where wages are not keeping up. So one way around that is to tax you when you die. And so that's one of the reasons why the government wants to raise the tax threshold here, where if you die with more than $1 million, that you're going to have to pay very high taxes on all of this money because the government needs that money. That way they can continue funding their operations. The other argument that's made here is, well, if you just have such a big amount of cash given to you, then you never have to work for this money and you get an unfair advantage over somebody else who might not have won the genetic lottery. While that is true, if you remember what I said earlier, what ends up happening for a lot of people when you get a whole bunch of money is you're gonna go out and spend it. Even if this money is in a trust and you get this cash in your hand, well, then you're gonna wanna go out and spend it, especially if you don't know how to earn that money, if you never worked for that money, and you get this big sum pile of cash, you're gonna go and spend it, which is good for the economy because that's gonna create more jobs. Because if these people get millions of dollars and then they go and blow it on, well, Gucci, or you go and blow it at Louis Vuitton, well, these companies make more money, they'll open more stores, they'll hire more people, and they'll build more manufacturing plants. And that's another reason why you see some very wealthy people say that they're not gonna leave their kids with that much money, because they want their kids to understand the value of hard work and have to actually earn the money that they get. Warren Buffett has said that his kids aren't gonna get much. Jackie Chan isn't leaving his son anything, and even Steve Harvey has come out and tweeted that he's gonna be spending most of his money, that way his kids don't get it. What you do with your money after you get it is your choice. Now, I didn't get $10 million when I said I wanted to be an entrepreneur. My parents came to this country with next to nothing, and they did not want me to be an entrepreneur. I was supposed to be a doctor, so I had to figure it out myself. But what you need to know is what is happening in the world. That way you can make smart decisions with your money today. That way you can capitalize on this change, because like I said before, we are going to see a big transfer of wealth. Now, while it looks like the money is going to transfer from the boomers to the millennials, what's going to actually end up happening is this money is going to go from the boomers to the millennials, and then it's going to flow to the top. So what you need to do if you want to be financially educated and make smart decisions is you need to own a piece of the top. That way you can be the person that's benefited as this money flows, because as money is created or as it gets passed down, it flows its way to the top, which is why you need to be financially educated. You need to be investing your money, that way you can get a piece of the action. What's up, everybody? If you want to continue building your financial education, I linked a relevant video here that I think you'll love, and as an added bonus, I have a free guide on how you can start generating passive income that you can download and read for free. All you gotta do is click that button below. Amazon, the company, brought in record sales during the pandemic because people needed to shop,